Miriam, a slightly positive start to the year yesterday with the NSE 20 up 0.5% as we saw, but really the Nairobi market has been one of the poorer performers globally and it fell by 5% last year. Do you expect a better performance this year?
Well, last year we saw the market struggling with a quadruple effect of shocks, chief being the global economic recession, which took a toll on all economies across the board, and more coming closer to home, we're dealing with runaway inflation levels, mainly fueled by food shortage. Well, looking into this year, we see most of these negative factors dwindling down. First and foremost, the global economy is seeming to be recovering, which is positive for all economies. And secondly, our inflation rates now seem to be more under control, which should increase risk appetite amongst investors across the board.
And of course, we were chatting to Ali Khan Sachu from Rich Management yesterday. He says PEs on the NSE at the moment very undemanding. So do you think there is good value to be found in that market?
Yes, I also see good values in this market, particularly because we are still a developing economy. So you'd expect that our PE ratios to be a bit higher because of the growth expectations factored into this. So definitely we see a better, better asset allocations towards equities. And like last year, you remember that last year most asset allocations were favored towards the bond market, especially because of the good returns that were being offered then. But this year we really see those returns dwindling, and investors will really have no choice but to invest in the equity markets, and also the attractive prices and the ratios, P ratios being one of them, will also serve to entice investors more.
Of course, we did see the bond market kicking off 2010 on a positive note yesterday as well. Do you think that we're going to see appetite for this government issuance starting to wane as we head into the year though?
Last year, you have to remember that we were coming under a lot of economic stress. So the government was under pressure to kickstart the economy, which meant that it had to inject enough funds into the economy and hope the multiplier effect of this would increase investment. Well, this year, we see a different situation. We don't see the government being called upon so much to stimulate the economy. We rather see the private sector stimulating the economy, and therefore this will reduce pressure on the government to borrow. Therefore, all that points towards a more stagnant bond market this year.
Well, just looking at the stock market, which sectors and stocks do you think are going to be the ones to watch in 2010? Which ones are going to perform the best?
Whenever an economy is moving from one stage to another, you'll find that the cyclical stocks are normally the first to be affected. In this case, I'll be looking at the financial sector, chiefly because last year lending had totally stalled. And with the economic recovery, what we are seeing is that lending is likely to be stimulated. And as we all know, the banking sector derives a bulk proportion of its revenue from lending. Last year, they had packed all the money in the lower yielding government bonds. So this year, once they channel these funds into more lending, this is likely to trickle down to better profits. Other sectors I'll be looking at probably are the automobile sector. You'll find that when the economy is not doing so well, the transport sector is heavily affected, although the positive effects might lag that of maybe financials because of the time lag between ordering for automobiles and the actual purchase of that. Well, I also see that sector recovering with time.
Well, among the financial stocks, which ones do you think are best placed as lending starts to pick up in the Kenyan economy?
The particular stocks I would like to that I would be looking at more would be the ones that have a growth, are on a growth trajectory. You will find that last year there are some stocks, there are some companies that were actually expanding despite the dwindling revenues. So we'd find that these companies, these financials, they are likely to be benefiting from two avenues. First being the realization of their the expansionary projects last year, and secondly being the general economic recovery. So I would be looking at stocks like KCB, Equity, and Coop Bank in the banking sector, that is.
Of course, we know that infrastructure development is a big story, not just in South Africa, but across the continent at the moment. How about some of your construction companies or materials companies like cement producers?
And we expect the construction companies to also do well, particularly because of the housing demand that continues to outstrip supply. And we expect that more houses will be built this year, and also the infrastructure projects that the government is undertaking. So basically, I would be bullish on Bamburi and Athi River mining. As for Portland, it is viewed to have a lot of government influence, so it is a bit difficult to project much on that company as for now.
Now, of course, Safaricom is one stock we have been chatting about a lot on the programme. It caused quite a bit of anxiety last year when its shares traded below the IPO levels. Prospects for this year, do you think that telecom stocks and stocks like Safaricom could benefit?
Yes, we expect that the communication sector as a whole will be under the spotlight, especially because we expect more of the benefits from the fiber optic cable landing to start trickling in this year. Well, what I would like to point out is that most companies are still in the investment stage, so we may not exactly see a lot of revenue streams at the moment, at least enough to offset the investments that have taken place. But I do not see a situation whereby the Safaricom share price will fall below the IPO levels this year.